BBC TV18, celebrating 15 years of leadership.
Our top story tonight, auction fever grips the country. 3 more coal blocks see fierce bidding. Mukesh Ambani throws his hat into the ring. Reliance Jio will fight for a pan-India 2G and 3G spectrum in the upcoming auctions. And Yuvraj Singh is still the king of IPL. The Delhi Daredevils shell out a whopping 16 crore rupees for the all-rounder.
I want to invest 10 billion in brown projects.
Gopi Chand Hinduja is on the prowl with a $10 billion arsenal, scouts for distressed assets and bets big on the renewable energy sector. That's an exclusive.
Vishal Sikka makes his first big acquisition after taking charge of Infosys, buys US-based automation technology company Panaya for $200 million in an all-cash deal. This is the company's second biggest acquisition.
Suzlon Energy gets wind in its sails following Dilip Sanghvi's 1,800 crore rupee bet. The stock hits an upper circuit in trade after Dilip Sanghvi's family and associates say they will invest 400 crore rupees in a 50-50 joint venture with Suzlon to set up a solar power firm and provide Suzlon with bank guarantees and a working capital boost.
The rate cut chorus could get louder. Wholesale prices enter deflation zone. The WPI index contracts 0.39% in January to hit its lowest level in 5.5 years.
Bulls run out of steam in the last hour of trade. A late slump wipes out all the gains on Dalal Street, but major indices cling on to end marginally in green.
The smart city push is gathering steam. Dholera, a small sleepy town in Gujarat, is all set for a big transformation. The government approves 3 tenders to build roads, water treatment plants, among others. These are the first smart city tenders to see a green light.
And big political headlines. Congress accuses Madhya Pradesh Chief Minister Yuvraj Singh of corruption. Says documents were tampered with to protect him in the admission and recruitment scam. And Delhi's new Chief Minister gets down to business. Kejriwal asks Power and Finance departments to send proposals to slash power tariff and provide 20 kilolitres of free water.
And just over 10 days to go for the budget. CNBC TV18's budget caravan starts to roll. Tonight we travel to rural Madhya Pradesh, malnourishment capital of India, to find out why government schemes are falling short. Coal blocks and cricketers go under the hammer. Telecom companies are ready to battle for spectrum. It's all about auctions on India Business Hour tonight. Good evening. Thanks very much for joining us, Surabhi. Did Delhi overpay for Yuvraj Singh? 16 crore rupees is a lot of money.
I guess, Shireen, we'll only know once we hit the pitch. It's a lot of money, but will it be money well spent? And yes, perhaps if Yuvraj can get Delhi its most wanted first IPL title, they've been desperately craving for this one.
Well, absolutely. But before we get to all the auction action, here's how the day panned out for our stock markets. It was green on Dalal Street for the 5th straight session, but most of those gains were paired in the last few minutes, and that was because of some selling pressure. Nonetheless, the Sensex remains comfortably above 29,000, gaining about 40 points for the day. The Nifty managing to close in positive territory and holding above the 8,800 mark as well. Mid-caps did underperform the blue chips, though marginally, with the index ending with losses today, but flattish performance, down 22 points. But let's go straight to the top story tonight. 3 big auctions in a single day. 3 coal blocks were up for grabs today, and they are seeing fierce bidding, which has been on through the day today. And on the last day to apply for participation in the spectrum auctions, Mukesh Ambani has made a big splash as Reliance Jio has thrown its hat into the ring, and a slew of surprises at the IPL auctions where Yuvraj Singh still remains the prince. 3 of our reporters tracking the 3 auctions very closely. Anshu Sharma, Malvika Jain and Purnima Murli are here with us. Anshu, to you first. 1 coal block sold, and I believe we are perhaps close to seeing the other 2 being sold as well. Is the bidding for today over? Do all 3 coal blocks have winners?
The bidding is still on, Shireen. After successfully auctioning 5 coal blocks in the past 2 days, the government has auctioned 1 coal block meant for the unregulated sector, which went to BS Ispat. The block is Maki Mangli, and the bid price was 918 rupees per ton. The other 2 coal blocks which are out for bidding are Trans Damodar, which is meant for the power sector, and the bid currently stands around 770 rupees per ton, and the bidders include SR Power, GMR Energy, Chhattisgarh, and JSW Energy. The third coal block is Mandla North, which is again for the unregulated sector, and there we have big players bidding for that particular coal block. We have Balco, Hindustan Zinc, Hindalco, Jayaprakash Associates, Shree Cements, Ultratech. The bids were currently around 2,377 rupees per ton. All this money, 14% royalty on these bid prices will go to the state government. So this is a good news for these states which are minerally rich. Back to you.
Challenge which I see in the longer run is the challenge on the PPA, because so far the government has talked about solar and wind as an obligation, renewable purchase obligation, whereas in my opinion it's an energy security tool.
We actually think in the future we could see the time where India is a larger market for us than the U.S. is. But it's in the top 5 markets that we look at globally. It has been that way for the last 3 years. So it's clearly a significant market. The exact size of our investment will depend upon these policy reforms and how much that allows us. We'd love to exceed the 5 gigawatts that we have pledged, but that all depends upon the policy framework and the availability of capital. So we'll see how it plays out.
All right, those are some views coming in from the Renewable Energy Summit. Of course, as coal auctions are underway, bigwigs there talking about the potential in renewable energy. But moving on from coal to spectrum, the fight for airwaves just got a whole lot more interesting. Mukesh Ambani has finally decided to take the plunge. Malvika Jain now joins in. Malvika, with Reliance Jio in the fray, is there a fear that prices could skyrocket and completely go to different levels than what wasn't perceived earlier?
Well, Reliance Jio is a cash-rich company, and we have seen that during the previous auctions in 2014, Reliance Jio did bid fairly aggressively, but COAI is maintaining that its members will maintain a disciplined approach, and maybe there is going to be rational bidding that one would see. But as far as interest in the spectrum auctions is concerned, companies like Bharti Airtel, Vodafone, Idea, Reliance Communications, whose licenses are coming up for renewal in 2015 and 2016, they had no choice but to participate in the auctions, and as expected, they have submitted their applications for bidding. But in addition to that, you have seen interest from Reliance Jio, Aircel, Uninor and Tata Tele, whose licenses are not coming up for renewal. So it is likely that they are going to be bidding for incremental spectrum, and this could create pressure for Bharti Airtel, Vodafone, Idea and Reliance Communications, because they will necessarily have to win back spectrum in circles where their licenses are coming up for renewal. We spoke to the Director General of COAI, Rajan Matthews, and here's what he had to say.
We have always indicated that there would be aggressive bidding in the 900 band, and perhaps on the 2100 there might be some less interest, but again, as you see today, all of the major operators have expressed an interest to bid.
Well, basically the 2100 megahertz band that he's talking about is the 3G spectrum band, and Ravi Shankar Prasad, the Minister for Telecommunications, has indicated that this is not going to be the last 3G spectrum auction that the country is going to see. Defense is in the process of vacating spectrum, but the auctions will kickstart on the 4th of March.
All right, Malvika, appreciate you joining us. And Anshu, thanks very much for taking us through the details of what we will see when the spectrum auctions open in March, and of course the coal block auctions continue. Now, on to cricket. It's just been 3 days since cricket's biggest carnival, the World Cup, kicked off, and there has already been an upset. Minnows Ireland defeated veterans West Indies by 4 wickets at the Saxon Oval in Nelson today. Two-time world champions West Indies scored a daunting 304 in their 50 overs, but the Irish chased down the target with 4 wickets and more than 4 overs to spare. Blazing half-centuries from Paul Stirling, Ed Joyce and Niall O'Brien led Ireland to a win. So as cricket fever rises down under, IPL Season 8 is the buzz back home, and once again Yuvraj Singh has made a clean sweep by becoming the most expensive player of the season. While the auction saw some aggressive bidding from Delhi and Royal Challengers, several top players found themselves left unsold. Purnima Murli and Surabhi Upadhyay decode the big numbers for you.
He may have missed playing the World Cup, but team owners of the Indian Premier League surely did not want to miss out on him. Yuvraj Singh has once again emerged as the undisputed king of the 2020 championship, with Delhi Daredevils spending a whopping 16 crore rupees to get him on board, 2 crores more than what the RCB had paid for the man with the 6 sixes fame in IPL 7.
Auction for Season 8 of the Indian Premier League saw a total of 122 players being retained. The bidding war surely seemed to be reaching fever pitch between Delhi Daredevils and Royal Challengers Bangalore. UV's response on joining the Delhi squad was a tweet stating that he was looking forward to playing for Delhi under coach Gary Kirsten. The all-rounder was clearly in demand.
We wanted him at a price, but I think, beyond a price, we weren't willing to look at him. So we're happy that others got him, and I think it's great that he's done so well.
Besides Yuvraj, Delhi has also spent a handsome 7.5 crore rupees to snap up Sri Lankan captain Angelo Matthews, who makes a comeback in Season 8 after remaining unsold in last year's auction. The team has also roped in pacer Zaheer Khan for 4 crore rupees.
We kind of got who we wanted to get. That doesn't necessarily equate into results on the field, but certainly we're happy with those purchases.
We felt last year we had too much youth in our team. And we wanted to go for more experience. So that's why kind of an Amit Mishra, Zaheer Khan and a UV were important selections with regard to that. Also someone like Angelo Matthews who's got a lot of international experience.
The second most valuable player of Season 8 is Dinesh Karthik, snapped up by Royal Challengers Bangalore for 10.5 crore rupees. Sunrisers Hyderabad and Chennai Super Kings meanwhile made more conservative purchases. For instance, out-of-favour English star Kevin Peterson signed on by Hyderabad for just 2 crores. The team has also picked up Ian Morgan for 1.5 crore rupees. Meanwhile, defending champions Kolkata Knight Riders have bought Michael Hussey for 1.5 crores. The day, however, didn't end without surprises. There have been no takers for South African opener Hashim Amla. Sri Lankan legends Kumara Sangakkara and Mahela Jayawardene will also remain mere spectators in IPL 8. In Bengaluru with Purnima Murli, Surabhi Upadhyay. The winners and the losers out there. Let's move on then to another major exclusive. With a kitty of $10 billion, Gopichand Hinduja is keenly scouting for distressed projects in India. But the twice-bitten Hinduja is now twice as shy and is choosing to invest only in carefully selected projects. In a chat with CNBC TV 18's Farah Bukwala Vora, the London-based co-chairman of the $25 billion Hinduja Group sheds light on his potential acquisition targets and explains why the renewable energy sector has caught his fancy.
Prime Minister and his key people, objectives and goals are good. But the patience in public is not there. They want to see things happening.
Yes.
They do not realize that 60, 70 years of the systems, procedure, the culture, what is there in bureaucracy, you cannot turn around overnight. Even when this hype was created, I never expected everything to happen overnight. But I gave directions and instructions to my team that we have to move forward. And from our worldwide exposure of India, I increased it by 10%. Now, being very clear that I will not be able to invest immediately. It is going to take time.
And so when you say that, let me ask you that what kind of a time horizon have you kept to invest into India?
I will tell you. No, the investment side, we have already started. You must have seen my announcement when I came on my last visit that I want to invest 10 billion in brown projects.
In brownfield projects, that's right.
Now, these brownfield projects, some people don't understand. What I mean to say from brownfield projects are the projects which have been stalled because of the people who are cash dry or have been stuck because of the clearances. Now, we have lot of experience on the development side.
So have you identified potential targets?
Yeah, we have identified 4 projects in power, 2 in infra, 2 in EPC,
all right,
and 3-4 in defense sector.
What are these projects that you have identified? Can you take us through them?
I won't be able to give the names because confidentialities are signed.
Yeah, absolutely.
But I mentioned to you about the sectors where we are going. Firstly, I am focusing on my 10 sectors. Again, in these 10 sectors, if I find companies which are not running well, I will be happy to acquire them and turn them around. After the experience what I have had, I will not go in a greenfield project.
Okay.
Except for alternative energies.
Renewable energy.
Because there, the time is 6 months, 8 months where we can go.
So have you identified a corpus that you would like to invest into renewable
not only
energy?
that, we have identified 3 companies with whom we are going to be joint venture partners.
All right.
I have identified, acquired the land also where we want to go. But again, we are waiting for the reforms to take place.
Well, renewable certainly seems to be the buzzword. That's the co-chairman of the Hinduja Group talking about $10 billion. That's the war chest to invest in brownfield assets, some of them distressed, and they hope to get going immediately. Now, the big corporate story, often criticized by analysts for being conservative over acquisitions, Infosys under Vishal Sikka could chart a new course, and in a major step, the new CEO has made his first big acquisition. Infosys has bought Israel-based Panaya for $200 million. This is the company's second biggest buy after Lodestone. That was a $345 million deal. Kritika joins us now with the details. Kritika, take us through the financial fine print of this acquisition that's been done under the stewardship of Vishal Sikka, the strategic rationale behind this. And I understand that this deal will be EPS accretive only in 12 to 18 months, but it really is a deal for capability building.
Absolutely. You know, Shireen, all day long we were working with just $200 million of valuation. We had no clue about the kind of incremental revenue that is coming in. The street was working with a figure of just $10 million of incremental revenue. Now, in the con call that the Infosys management has held, they have said that the deal value is 6 times the revenue size. So the incremental revenue thereby stands at around $33 million. This is fairly steady according to most analysts, but what this means is that the overall revenue base is not directly linked to their individual client accounts and their individual revenue footprint, which could be a little bit of a concern when the markets open on Wednesday. Having said that, they have a client base of around 400 active clients currently. As you said, the company, the deal is expected to be EPS accretive in about 12 to 18 months. But once the deal does close by around March 31st, they will start to see the impact on margins, which will just be about 10 to 20 basis points. And possibly towards the latter half of the con call, they said that by the end of the financial year, they should get some clarity on if at all they could see some additional revenue capability coming in closer, and it could be possibly by July to August. So they're just working with these analysis. Now, to a quick idea about the operations, Shireen, once the deal is completed, Abdul Razak, who has recently joined the company from SAP, will be heading it. The company will essentially, once the deal is completed, will come under the platform business for Infosys. So that is an area that they're looking at expanding. In fact, they even threw in a number of 30,000 of employee addition that they're looking at doing. They didn't break up whether it's platform or the entire business, but definitely the platform services is what they're looking at expanding in.
Kritika, so what does this company bring to the table? Why is Infosys so gung-ho on this acquisition? What are this company's clients? What does it do?
So, you know, they have clients like Coca-Cola, Volvo, Dolby, but they also have clients like General Electric, General Motors, Johnson & Johnson, which these 3 are essentially key clients of Infosys. So there are a lot of cross-selling opportunities that they have. But the big question and the reason why they've gone out and made this $200 million investment, and, you know, Shireen was at NASSCOM, the whole talk was about digital, about how clients are moving to
to digital, there is a disruption happening in terms of the kind of services that clients are asking for. So simply put, big data, enterprise solutions, automation, even areas like drone, robotics are areas that no domestic players has presence in. 40% clients coming in for Panaya from North America and headquartered in Israel, which apparently is the next innovation hub according to Sika, and no domestic player has a presence there. So these are the large areas that they're looking at.
Panaya is a leading provider of automation technology for managing large-scale enterprise software landscapes, and its acquisition fully aligns with our renew and new strategy to renew our service lines with the power of automation, artificial intelligence, and innovation.
This quarter, we don't expect any revenue to come from this acquisition. On the margin front, this is a capability building. As you're saying that, we are going to look at our amended strategy to build capability, and we believe that's a huge opportunity in front of us with this acquisition. So I think we would see it to be EPS accretive in 12 to 18 months.
Well, that's the Infosys management on the strategic rationale and the strategic fit for the Panaya acquisition. Now, staying with Deal Street, on Saturday, wind energy company Suzlon gave its shareholders something to cheer about by selling a 23% stake to Dilip Shangvi's family for 1,800 crore rupees. Today, the two giants, Suzlon and Shangvi, said that they will also jointly enter the wind farm space through an equal joint venture, which will see Shangvi putting up 400 crore rupees. In addition, Suzlon will also ramp up its focus on solar energy. Let's take a look at all the details.
Not only is the wind blowing in the right direction for debt-crushed Suzlon, the sun is also shining bright. Suzlon and Dilip Shangvi's family and associates are investing 400 crore rupees each to develop a 450-megawatt wind farm project. The idea is to cash in on the Modi government's thrust on renewable energy. In addition, Suzlon will set up a separate solar EPC business at the same site as its wind energy projects. However, Suzlon's bias will remain 66% with wind energy. Suzlon's Tanti says this will help better utilize the power grids it has access to. Remember, only on Saturday, Shangvi, who owns Sun Pharma, had committed to buy a 23% stake in Suzlon at 1,800 crore rupees through his family entity. This will see the Tanti family's stake in Suzlon come down from the existing 30.94% to 24%. DSA will come in as a person acting in concert, or PAC, in Suzlon, keeping management control intact in the hands of Tanti. Since this is, in essence, a pooling arrangement for voting, the combined shareholding of DSA and Tanti will increase to approximately 46%, which triggers an open offer for 158 crore shares at an offer price of 18 rupees per share. With the company also looking at an upcoming FCCB conversion in FY16, Suzlon's fully diluted equity will stand at approximately 590 crore shares, up substantially from the current 340 crore shares. This 1,800 crore rupee fund infusion from Shangvi, along with the money from the open offer, will give Suzlon a much-needed boost when it comes to working capital needs, which are currently as high as 3,000 to 4,000 crore rupees. Besides, Shangvi has also agreed to give a guarantee to Suzlon's bankers for its loans. Not for nothing, the Suzlon share surged 20%, hitting and staying at the upper circuit. The stock has risen 55% in 2015 alone. In Mumbai, with Sajit Mangat and Pragya Bhardwaj, Arvind Sukumar.
Moving on, the chorus for more rate cuts from the RBI is set to get even louder. Wholesale prices in India have entered the deflation zone. The wholesale price index in January has contracted by 0.39%. This is well below a CNBC TV 18 poll, and also below 0.11% clocked in December last year. This is also second decline in the last 3 months. But this data is perhaps sending mixed signals to the RBI, and here's why. While fuel prices dropped by over 10%, food prices have seen a sharp increase, accelerating to 8%. Ekta Batra is here with the analysis. Ekta Batra, do break down the numbers for us.
Well, the WPI data definitely surprised on the downside. It came in at a figure of 0.39% negative, which is basically a deflationary figure versus a rise of 0.11% month on month, and versus an expectation of a rise of 0.15% for the month. In fact, it was the lowest level that we've seen since June 2009 for the WPI data, with core inflation declining sub 1% to 0.88%, and the November WPI being revised lower to a decline of 0.17% as well. Now, if you look at the internals, the decline was broad-based. It was mainly because of fuel inflation that was down over 10.5% versus around over a 7% decline in the previous month, along with manufactured products inflation, which is basically your core as well as your manufactured food products inflation, declining or softening to 1.05% versus 1.57% on a month-on-month basis. What inched up was food articles inflation at 8% versus 5.2% month-on-month. We saw vegetables inflation spike 19.74%, pulses and fruits also in double digits, and on account of a favorable base which was wearing off for the food inflation primarily. What are economists saying? The WPI data will not make the economists change the expectations from the RBI. That's simply because the CPI data is the nominal anchor or the data, the key data point that the RBI will work with. But the WPI data for Jan definitely provides the additional support that was required for the RBI to make its decision in terms of possibly being more accommodative in its monetary policy, which economists changed in terms of expectations on the greater side in terms of cuts post the CPI inflation that came out for January sometime back. Overall, with the trend of the revised downward figure for November, economists have said that that it indicates that the pressure of lower inflation is firmly entrenched in the economy.
January inflation dipping in negative territory. Well, that's all we have on India Business Hour this evening. Thank you so much for watching.
Aditya Birla Group presents Budget 2015, the Make in India Budget.